June 3rd, 2024. Today was consecutive sell climax day. I actually had a couple examples that I wanted to show in relation to the swing here. And I thought it was really interesting. So you can see that, first off, the big spike up here still has a lot of influence over the market. So we went down surprisingly far. We probably went down further than we should have. And so you know that when we get towards the bottom of this buy climax, there's going to be traders looking to buy. So you could argue that consecutive sell climax is one, pullback two, pullback three, and then bar 38 was a reasonable buy. But if you look at bar 38, I was looking at it real time and I was looking at my examples. And I have a couple that I wanted to show. One in particular. Well, we can start with this one. So you can see here we have a small buys. This is May or February 2nd. We have a small buy signal bar, and we ended up getting the rally, and the buy signal bar is coming relatively low. And again, small buy signal bar after clear consecutive sell climax is coming really rather low, and we should get at least some sort of small rally. And there's one other really good example. I think it was actually this one that I wanted to show. But you can see, again, we got a big bar, 28, and then the market went sideways first. And it might have even had to go, this year it just went sideways, but sometimes it has to go sideways to down before you get the smaller signal bar for traders to buy above. So when you're trading and you see the consecutive sell climaxes, and then you see a big outside bar, it's not quite an outside bar, but theoretically, it's close enough. So I would argue 37 or 36, 37 is an OO pattern. You can buy above 38, but if you're buying above 38, I think it makes a lot more sense to use a stop, a measure move down plus a couple of ticks. So measure move down plus a little bit lower. And you can add either directly below 38 or you can add above a bull bar closing near its high at 46. So when you see an OO like that and you get the really big bar, 38, you have to keep in mind that we might not rally straight up. If we had gotten a small bar, let's say, ideally 46 would have been a small bull bar. Maybe this tail is fine, but it's closing somewhere up here. And then that's a much more credible buy than directly above 45. Because 45 is a bear bar, so it's probably more of a minor reversal. But the context is really good for a reversal. So you can start buying above bars like 46 when you get the bull surprise bar and trying to close gaps like the 32 low somewhere like here, or even all the way up to the 15 low, which I thought was the target at the end of the day. We blew right through it. I didn't think we were going to get there after we started to do this, but we did end up getting there at the final bar of the day, which happens sometimes. Bar one, a bear bar, but a big tail. It's a possible high of the day, but I don't really think it's all that ideal to be looking to sell right here. This was so strong, it's probably going to get a second leg sideways to up, but we're probably going to get some sort of, you could argue that was a big enough bull trend that we should go sideways for 20 to 30 bars before we get the rally. But either way, I think that it's hard to be selling up here. I would rather wait and see what happens. Bar two, it's a high one for the bulls in the bull trend that started in yesterday's close. It's good for the bulls on bar two, but I don't really think we're going all that much higher. A really small doji bar after a pullback, so I don't think it's all that good. Bar three is a double top with bar one. Bears hoping double top high of the day, which is what ended up happening, but not a very high probability bet. To me, this just looks like a tight trading range, and you get no follow through on bar four. It doesn't even trigger. So bulls hoping that we're still in a bull trend. This is a two-legged pullback, 1-3, and that we're going to rally, except if we get a poor signal bar on bar four. And if you'll notice, we still had at this point an open gap with yesterday's high. So let's say 4 was a bull bar closing on its high. I think it would be a little bit more credible to buy above that. Betting this gap stays open, this might be the start of a small pullback bull trend. Obviously, if that happened, if bar 4 closed on its high, it's not a high probability bet at all that you're buying above 4 and the gap's going to stay open. It's just going to rally for a lot of the day. But the math is, I think, reasonable enough to buy if that were to happen. But instead, you get a disappointing close on bar 4. Bar 5, you can see it's a bear surprise down. I think we're probably still always in long. It's hard to sell. It could be some sort of third leg down, 1, 3, 5, but 5 might be strong enough to reset the market, this, overall smaller market cycle here. But I think in the big picture, with how strong yesterday's rally was into the close, we're probably still going to be always in long from bar 5. I need to see more out of the bears if I'm going to short. Right now, I'm looking for something reasonable to take for a swing buy and look for a second leg up from the big rally yesterday afternoon. Bar 6, disappointing follow through if you sold below 5. you kind of have to be expecting disappointing follow through if you sell below fives, because it's really, there's a huge tail. Or sorry, because we're probably still always in long, and bears need at least one more big follow through bar on bar six to make it always in short. And even if they get it, it's probably always in short, but it's not all that clear because this was just so incredibly strong. So it might be more of, traders looking to scale in lower and buy, fading a good bull close on, or fading a good bear close on bar six, rather than traders selling below and selling aggressively on bar five. You can see traders bought right around yesterday's close, and the close of this bar, which was a magnet. And I don't know, if you were watching live, you can see when bar six got bought up, bar seven, within 2 seconds of the bar opening, with bar seven opening, it was up here. So it took literally like the bar opened and then it was immediately right here. And the reasoning for that, the reason for that is some sort of news event. But the reasoning for us selling off is consider this. You bought, right? So you bought somewhere down here. You faded this bear close, or you were hoping, let's say you bought, I don't know, size of scalp 5 points below bar five, betting that even if bears made money, they were going to scalp out, and that we weren't going to get consecutive bear bars 5 and 6 closing near their lows, which was probably a reasonable thing to do. And this was strong enough for a second leg up. And then you see bar six close. On the close of bar six, you're probably kind of in a tough spot. You're thinking to yourself, well, we might bounce a little bit, but I'm not sure how much higher we're really going to go. And bar six didn't do exactly what I wanted. So a lot of traders, I think, in this area would probably be considering taking profits. And, just thinking, this is kind of my thought process behind the sell-off anyways. And then you see bar six close, you're kind of disappointed, you're considering what to do, and then immediately the bar's up here. So all of a sudden you have an extra 10 points in your pocket, and traders who are going to see that and they're going to say, well, I'll take that. I think, that's a much better situation for me. And that's why traders, when it gets up, the market just immediately goes up here, oftentimes it'll pull back before it does anything. Occasionally it'll just be a huge rally, but that's pretty rare. So I think that's the reasoning for the sell-off initially during bar seven, or after basically, it was borderline a gap up. It was so fast. 7, a bear bar, but not quite closing near its low. Again, we have a possible high of the day. You could argue that it's a big low one short in the bear trend, but this is a huge pullback. So we're probably going to go not that much lower before we pull back. But I think we might be always in short. I think one more bar would make the market always in short. And we do get that bar on 8. I thought on the close of 8, the market was, I thought we were always in short. Again, you can make an argument that not quite, but I was pretty convinced that at this point we were always in short. The problem with selling, well, first off, as 7 triggered in the last minute or so, and traders weren't as eager to sell below 7, but they were more eager selling a 50% pullback of 7. The problem with selling below 8 is your stop still has to be below 7 or above 7. A stop above 8 doesn't really make that much sense. So what you're risking if you're selling below 8 is that the traders who sold the 50% pullback of bar 7, they might say, oh, well, I have a 5-point scalp. I don't really want to risk all the way above 7. I've made enough money, and they might just exit their trade. What you're hoping is going to happen is you're going to get, some sort of a little bit of a give up bar for the bulls and accepting a trading range, and we might get some sort of sell off down. But even then, it's probably not going to be too crazy of a sell off. So is it probably reasonable to sell it? Yes, I would say so. But because I think we're always in short, but we might be trading range always in short. So it's not as ideal as it could be. 9, a bull bar closing pretty near its high. It's good for the bulls. The problem with buying it is that we after 4 straight bear bars. However, with the rally being as strong as it was yesterday afternoon, I do think we're going to get a second leg up from it. And the second leg up could be starting now. 9 is a double bottom with 6, neckline 7. Bulls buying above 9. They know it's not very high probability. This doesn't help either, but they know it's a potential low of the day. And with how strong we were earlier in the day, it makes sense to take the buy for a swing. I think maybe, 1 in 3 chance that's the low of the day. But the thing you have to keep in mind is we had a reasonably tight channel down. So we're probably not going to rally straight up. It's probably going to be more of a sideways movement. 10, follow through for the bulls, but it's not really all that good. If I was a bull buying here, I wanted to see 10 be a really good bull bar. But again, after this, you have to expect we're going to go a little more sideways, and we might try and trap traders out. 11, a bear bar. It's a bear close, but it's not really all that great. You can see there were buyers below 10, which is probably a pretty reasonable limit order trade. But the question becomes, the traders who bought below 10, what are they going to do when we get back to the 10 close? So are they going to buy, they buy below 10? Are they going to think that, well, when we get back towards the 10 close and the 10 high, I'm going to keep buying more because I think this is starting to turn into the opening swing? Or am I going to exit and just take my scalp and wait for more price action? And bar 12 was, on its high for a good portion of the bar, and it was bull bar for a very good portion of the bar, but it ended up a bear doji bar because traders ended up getting disappointed with how it was moving, and so they just exited their trades, and that's what caused this 12. So if you're a bull and you bought 9, 10, either one, you really wanted to see 12 be a bull bar of some sort, so that bulls could say, bulls are at least still interested in buying. And if it's closing on its high above the close of bar 10, I think that's a lot better for the bulls because it shows that the bulls who bought down here, or the bulls who bought here and scaled in lower, are not selling. They're instead buying more. But that's not what happened. We got a bear doji bar. And the bear doji bar is rather disappointing for the bulls. So a lot of bulls will exit below the IOI 10, 11, 12. Do you sell below 12? I probably wouldn't. Personally, at least. The bear channel is, the argument, I think, for the bears. So we're going here. And then redraw his channel. So the bear channel, the argument is something like this. But I don't think it's really super credible. We probably have to test back to the 8 close, which is a problem for the bulls because it was a reasonable sell. So the traders who sell and scale in higher should be able to make money, but I'm kind of having trouble with the process of selling below that doji bar. So I would personally just leave it alone. Do you exit your longs? You definitely can. It's disappointing for the bulls that, we got this bear close. So you definitely can. Do you have to? I don't know if you have to. Because a lot of times, this is going to fail and we'll start to go sideways and maybe up. But I think if you don't exit, it's okay to exit below 13, a bear bar, closing somewhat near its low. Does 13 make the market always in short? It might. Bears might need one more bar, but it's reasonable, I think, after 13 to think that the market is always in short. We're probably going at least a little bit lower, I would imagine, at least below this low. 14, follow through for the bears, but the tail on the bottom. It's not really all that ideal to be selling that close because of the big tail, and you're right at the moving average, and it could be a wedge, bar 1, bar 9, bar 14, or maybe 1, 6, 14 with the overshoot, 1, 7, 14. So a lot of different ways to look at it, but it's not really all that ideal to be looking to sell. However, I think sideways is mostly the best case for the bulls here. If we were going to get some sort of rally, we probably would have done it on 9, and you're following another 4 straight bear bars. So 11, 12, 13, 14, 4 straight bear bars. So even if 15 is a bull bar closing near its high, reversal up from the moving average, it's probably an okay swing, but you have to question why didn't we rally with the good-looking signal bar on 9? Thought if we were going to go up, it probably would have done it on 9. It would not give traders an even lower chance to buy. So this might end up being more of a trap if we do get some sort of reversal up. And 15 instead ends up being a doji bar. Bulls are hoping it's a wedge, but the bears see a low 1 short in their bear trend. Which argument's more credible? I'm not sure either one of them is all that great. The bear trend is not amazing. It's a reasonably tight channel, but you're selling relatively low in the channel. So if you're selling 15, you're hoping for a breakout below 15. That's pretty strong, and it might go more sideways a lot of the time. I think it's probably better to sell 15 than to buy it. But I would personally not do anything here. I think at this point it's better to wait. And then you get a surprise bar 16, good for the bears, but the problem with selling is the downside is somewhat limited for the most part. Again, I think today was an exception. I don't think you usually get this big of a move down before you get some sort of attempt up from the bulls, because again, the rally at the end of the day was so strong that it made me think we're probably going to get at least some attempts to the upside somewhere in here and not just continue all the way down. But 16, bear bar closing near its low. It's a new breakout. Bears want to sell, and they want to get maybe a measured move down somewhere to here. But I'm not sure, it's reasonable to sell 16 though, always in short, bear bar closing near its low. Follow through bar on 17, we're creating open gaps. So the 15 low and the 17 high is an open gap. Good for the bears, 16, 17, bear bars closing near their lows. Reasonable sell the close bars, and we are always in short. So it's okay to be short down here. But the thing you have to keep in mind is this is definitely pretty climactic. And with how strong the rally into yesterday's close was, I'm not sure how much further we're going to go. So these might be more of scalps selling 16, 17 than they are swings. Reversal attempt up 18, but pretty weak. Bulls might exit above it, but I'm not all that sure. Bears might exit above it. not really, positive that they have to, but I'm not sure how much further down we're really going to go. 19, you can see buyers below 18. So 18 was a low one short, but it's not a very good low one short considering how climactic the move was and yesterday's afternoon buying. So, and then we get an outside bar, 20. Good outside bar for the bulls. We're probably going a little bit higher, but it's a minor reversal for sure. The move down from 11 to 19 was really strong. So that's going to need a second leg sideways to down. I think your best case scenario buying above 20 is hoping to get to the 15 low, which isn't an unreasonable thing to do. But it's going to be a bit of a difficult trade, and I'm not sure. Your upside is just in general relatively limited here, so it's really not all that great. I think we need to go sideways for a bit more. Bad follow through on 21, which is relatively expected. If you took a buy like 20, it was probably going to go sideways first, and you knew that. 22 follow through for the bulls. So if you bought above 20. Disappointing follow through 21, and then a bull bar closing near its high 22. Traders might look to exit at 1-to-1 of true risk somewhere up here, which is where 23 went to, so that makes sense. So you bought above 20, you probably put a stop below 20. You didn't know that your stop only actually had to be right here in order to not get hit. But once the market starts to go in your direction, it becomes clear that you only had to put a stop there. So that's about where the traders exited up here on 23. So 22 follow through for the bulls, 23. It's a low one short for the bears. Some traders would argue it's a low two because 21, and then second leg 22, and then second reversal down 23. But I look at 23 more as a low one short. Would I sell 23? I probably wouldn't. I think if you're selling 23, the channel up is a little bit too tight to be looking to take any sort of shorts. So I'd probably be flat here more so than anything else. So the bulls exit below 23. I don't know. I mean, how much did you really like, this? You know what I mean? If you bought above 20, this isn't really all that great. The trade's not doing exactly what you wanted it to, and it's kind of a difficult trade to manage. So a lot of traders might just look to get out. 24, it's a third push up. 1, 2, 3. I would not buy above 24. You're buying high one at the moving average after a tight channel down, and you're buying a third push up. Outside down 25, a bear bar closing near its low. Do you sell 25? I thought we needed to go a little more sideways first. If you're selling 25, you have to realize you probably have to have a reasonably wide stop, and we're probably going to go sideways a little bit more before we go down. Us probably needing to go a little more sideways before we go down is probably the reason for the reasonably wide stop. But I personally would not take that. I think this channel up is pretty tight. It might get a second leg up. We might test somewhere up in here because some traders bought and they're scaling in. So I wouldn't really sell 25. I'd rather wait and see if 26 is a good follow through bar or something. Then it makes a little more sense to sell. But I would personally just rather wait. Outside up 26, but sell off. So outside bar 25, outside bar 26. It's an OO pattern, which is usually about 60% chance of some sort of move, but you don't want to sell below 26, and you don't really want to buy above it either. So I don't really think anything is worth taking here. I'd rather wait, but it's noticeable that we keep selling off when we touch the moving average. You can see, got there, sold off, got there, sold off, got there, sold off. Buyers below 26 during 27. A reversal up. Do you buy above 27? No, I probably wouldn't. If we were going to rally, we probably would have just done it here and gotten a vacuum test of the 15 low and then started to go sideways. That's something you do start to develop is, a skill that you can think to yourself, well, if we're going to go, it's going to be now. That sort of thing is important to develop, but it just takes time. 28, an inside bar. It's a low one short essentially for the bears. I think this is just a tight trading range. So at this point, what am I doing? I would basically just sit on my hands and wait for a bear bar closing near its low to short or a bull bar closing near its high to short. Could you probably sell 31? Yeah, you probably could. Could you probably sell 32? Yeah, you probably could sell to close or sell below. But for me, I think I would just rather wait for a bear bar closing near its low rather than take trades I'm not totally sure of. 29 looks like a second leg up. So you could argue that bear argument is that 25 is the start of the bear trend, and 26, 27 is the first leg, and 29 is the second leg up. So it's a two-legged pullback for the bears, and they're hoping we're going to get a reversal down from the moving average since the bulls can't seem to keep the market above it. The bulls, they want a breakout above the tight trading range. They're hoping that the bear trend has ended and this is some sort of final flag. So even if we do go down, it's not going to be all that far. And I do think that 18 through 31, as silly as it sounds, was a final flag because it's a tight trading range and a bear trend. When you get a tight trading range in a bear trend, it's going to become a magnet later on. It's just a doji bar on a higher time frame, and doji bars are magnets because we got a strong breakout below the doji bar on the higher time frame, and that shouldn't happen. So the traders who took the trade on, I don't know, let's look at like a 30-minute chart. Right. So something like this. The traders who are buying anywhere in here, they know that it's 1 pullback, 2 pullback, and they might get a 3, but we're going to ultimately test back somewhere in here. So I thought, I didn't look at the 30-minute chart. I just pulled that up there. But ultimately, it makes sense that this is a final flag of some sort, and we should test back into here later this day. Additionally, we're only 30 bars into the day. So, how much lower are we really going to go? Is this going to be like a minus 6% day? Probably not. And, so I'll get to that. So 31 outside down, good bear bar, but I'm probably not going to sell it. I'd rather wait. I can see the logic behind selling it. Two-legged pullback from the bear trend that started at 25, and sellers at the moving average 3 times now. Sellers at the moving average 23, 26, and 31. So I can see the logic of selling it, but I'm personally not going to. 32, a bear bar, but a big tail on the bottom. It's more, do you sell the close of 32? You probably can, but it's just difficult because we can easily test a little bit further back up here, and I don't really want to get caught selling a little too low in a potential trading range. And then you get a big breakout below its low 33. Had 32 closed on its low, I was going to sell it, or if 31 closed on its low, I was going to sell it, but neither did, so I just left them alone, and I just let it go without me. 33, a bear bar. Really good bear bar, but to me, 1 pullback, 2 pullback, 3 consecutive sell climaxes, and that's when I saw that, that's when I started looking at the patterns, and really you got to realize that 38 doesn't look quite right, so it might trade a little differently. The patterns, they're all the same, or sorry, when you see consecutive sell climaxes, they're probably going to act the same, but they might do minor things a little bit differently, like get one more test down, things like that. So it's good to have a lot of different examples and look through a lot of different days that are like this. 34 follow through. Is it sell the close? 33, 34. Yeah, but you're selling really low. It's probably more of a scalp than anything, and it's hard to do with such a big risk. 33, 34. Follow through 35. I think a lot of traders are looking to scalp here. And then 36, a doji bar. You probably don't have to exit above 36, but I'm just not sure how much more to the downside there is for the bears. I think their best case scenario is probably the bottom of this buy climax here, so somewhere down here. And then we're going to get some sort of bounce. It's not going to do this all day. 30, 38, an outside. Again, I looked at this as an outside bar because it was essentially, there was just one lower tick here. So I looked at 37, 38 as an OO pattern and a reasonable buy above 38, but you need to have a stop and measure move down. The bull bar is a little bit bigger than you'd like it to be. So your two options are have a stop, a measured move down, since you're buying relatively high in what could be a tight trading range, 36, 37, 38. Again, 36, 37, 38 is an expanding triangle on a lower time frame, since it's expanding triangle on this time frame. That's what OOs are. They're just expanding triangles, which are breakout mode patterns. 39, a low one short for the bears. But I think after 38, the dynamic of the market has changed. Even if we start to reverse back down, I'm not really sure how much further we're going to go. So the two ways to manage the trade, if you buy above 38, is you sit through 39 and you use 40 to exit your longs, which some traders did. That's why when we rallied on 40, we got the sell-off. So some traders bought here. Maybe they scaled in close to 50%, and then they just dumped the trade at the 40 high, thinking they were going to be able to buy lower, which they were. So that was true. And other traders, they see 38 and 39, and they say, well, I still think that my premise is valid, so they don't exit during 40. 41, you can see we traded below 38, and then, or sorry, 41. Yeah, 41, we traded below 38 and then got a big reversal up, huge tail. When I saw that, I thought we probably needed to get the rally relatively soon, where there was reasonable risk of at least another leg down. So what happens with a lot of traders? Well, they bought above 38, and then they bought more below 38, which a lot of traders were expecting, and then we're around their entry price. And so when you see 41, you kind of have to realize, this is a decision bar on 42. Are bulls who bought and they scaled in lower, are they just going to exit at break even and look for the next good bull bar and wait to buy? Or are they going to start buying now and we're going to get a reversal up on 42? And on 42, instead we got a bear bar closing near its low. It's always in short and a bear bar closing near its low. So reasonable to sell 42. Follow through for the bears on 43. Again, probably still a sell the close bar, reasonable to sell the close of 43. And then outside down 44. Again, you can sell 42, 43, 44, but they're probably more of scalps. 38 changed the character of the day. So you can be selling down here, but you're selling really low in a bear trend. So you have to be really quick to get out. And a lot of traders, they sold below 42. They got their 10 points, a little more, and they exited. A lot of traders, they sold below 44. Maybe they scalped with 5 points, a little more, right? So a lot of targets in this area, and we're towards the bottom of the SPY climax. A lot of traders will exit, and that causes the bar on 45 to have such a huge tail. It could be, and it's big consecutive sell climaxes, big wedge. You could argue wedge 6, 20, and then, 30, 37, and a failed breakout below the wedge, and we're getting a reversal up. Or you could just say 1, 2, 3, and, this is just a leg within that bigger leg. So I think either way of looking at that is fine. 46, a huge bull bar, a surprise. So what happened? Well, I think the bears who sold, below 42, 43, 44, if they were hoping for a collapse, they see 45 and they're disappointed. And now they think they might be trapped. So they just exit at the market, and that causes 46. 46, a bull bar closing near its high. I think this is the reversal. I would say 60% chance we've seen the low of the day, and we're probably going to start trying to close gaps. So really strong buy above 46. Follow through 47, a tail on the top. We might go a little more sideways first because 5 straight bear bars, but I wouldn't be surprised if this turns into a spike in channel like it did. So a lot of times after consecutive sell climaxes, let me just grab from there, you end up getting, hold on, let me find what I was looking for. You do end up getting essentially a spike in channel. This was just a tight channel, more of a tight channel. You get a tight channel, I suppose, or a spike, pullback channel. This is a bad example of this. Yeah, a lot of these aren't. This is more of the examples I was looking for. Spike, pullback channel, spike, deep pullback, and then channel. So all of those things are possible. 48, a bull bar closing near its high. Can you buy above 48? Sure. It's by the close. We're always in long. We're probably getting back to the 32 low at least. More follow through on 49, but a tail on the top, so a bit disappointing. At this point, I was relatively convinced that we were going to close the gap with the 20 low or the 32 low. So I thought we were going at least to somewhere up here. And we were probably going to get a vacuum test of it before we started to go sideways. So pretty exceptionally good reversal, 46, 47, 48. 49, like I said, follow through, but a tail. 50, more follow through, but again, tail, so a bit disappointing. 51, 52, more follow through, but again, look at the size of the bodies in the bars, right? Really strong bars, 45 or 46, 47, 48. And then we have shrinking bodies, 49, 50, 51, 52. And those bodies have now reached the initial magnet, which I thought was the 32 low, because that's where bulls bought and got trapped. So that's an open gap between the 32 low and the 34 high. You could use the 32 low, or you could look at the 20 low, arguing the 20 low, I think, was a better buy area to buy below, or a better reason to buy below 20 than there is to buy below 32, but it's the same price. So, you could use either, but I think, well, it was the exact same price, right? Yeah. So you can think of it as either. Pullback, 53, but not really all that good. I don't think we're going much lower. I do think we're still going higher, but we could get a 2-legged correction here. So 54 is a high one. Is it, it's probably reasonable to buy above 54, but you need to have a wider stop. Buying above 54 with a stop below 54 isn't really all that great. This is a high one, but we're probably in an overall trading range. So it's probably going to lead to a deeper correction before it leads to trend resumption. 55, follow through for the bulls, but it's really not as good as it could be. And then a doji bar, 56. So if you see the doji bar, a lot of traders, what they did was they bought above 54. They were hoping 55. They saw 55. They said, okay, I'll give it another bar. They're hoping 56 was going to break strongly above the high one and start a new trend. And instead, we got a doji bar. So during 57, when we rallied back up to that breakout point price, they just dumped their longs, and that causes 57 to close on its low. I think if you're long for any reason, you exit below 57. It is an expanding triangle, so that's why we did end up getting the rally. But I think it's hard to stay long after 57. So traders would just exit below 57, which is why 57 traders bought the close of 57. 58, a good bull bar closing near its high. They bought the close of 57, basically betting that they would make at least a scalp, and we try to get some sort of rally, and their stop is below 57. So they're not risking very much money to try and do so. So reasonable to do that kind of thing. 58 is a good bull bar. It's a big high two, or not really that big, but it's high two, spike, pullback, and you're hoping buying over 58 that we're starting the channel. So you want a measure move up either to here which is, somewhere up here. So just that size, or a leg 2 measured move, which would be somewhere up here. We'll probably have to test back into the middle of this since it's a triangle, and we should test the apex of the triangle, which we did on 63. But anyways, 57 or 58 is a smaller bar. I think a lot of bulls wanted a bigger bar. I could be wrong, but I wanted to see 58 totally undo what happened on 57. But that was mostly because I was already long. Had I not been long yet, I probably would have hoped that 58 hit smaller so I could buy it. So if 58 got bigger, it might have trapped more traders out. 59, follow through for the bulls. We're trying to get a break. We're just probably forming a wedge, 51, 50, 56, and, potentially 59, 60. But I don't really, it's not really a good looking sell. I'm more interested in seeing if we break out above it. 60, a bear bar closing near its low. We might have to test back to the 57 close. I think same idea. If it trades below 60, I would just get out of the trade. It's not really worth being in. And instead, traders again buy the close of 60, and we get another high one. So now, at this point, I think it's a wedge, 52, 56, and 60. And we're trying to get a breakout above the wedge. Breakouts above wedges are generally a 50-50 bet. So if you buy above, 62, you're probably thinking 50-50 chance we break out above the wedge and get the measure move up. And 50-50 chance this whole thing fails. And then 60, so 62, follow through consecutive bull bars by the close. But again, I think the math is probably a little better, maybe a little better for the bulls. But with how strong 57 and 60 were, I wouldn't be surprised if it was 50-50. That was kind of my feeling on it. 63 chested back into the apex of the triangle from earlier, from 18 to 31, and we found some sellers, big tail on the top and the bottom. But it was a bull close, which is really important. If it was a bear close of any kind, I think traders would exit below. This is not the rally that the bulls wanted to get back to the 15 low. They wanted a bit of an easier rally, but the bulls keep doing just enough to keep the other traders in. You get 57, a bear bar closing near its low, but bulls buy the close, so it never triggers, so bulls stay in. You get 60, bulls will exit again, but bulls buy the close, so bulls stay in. You get 63, bulls would exit below if it started to become a bear bar, but it's a bull bar, so some bulls buy the close. You get a bull bar 64. And right as bulls are hoping you're about to start to get the rally, you get 65. Some traders taking profits. So it might be a failed breakout above the wedge, and a lot of traders will look to exit below 65. But what happens? Bulls buy the close. So you can buy above 65, hoping for the breakout above the wedge. But traders are getting relatively impatient here. They want to start to get the move up towards, the 15 low. And sometimes what happens with these things is the market, it'll do just enough for a little while, and then it'll trap you out, and then it'll go. And I think that's just trading. I'm not buying 76. It's way too late in the day. But some algorithms definitely will. So 68, basically bad follow through for the bulls. Again, they're hoping that we get, some sort of good follow through bar, but it's not quite what they want. 68, traders might exit below 68. This should rally pretty quickly if it's going to go. 69, a bull bar, but a big tail on the top. So again, more uncertainty for the bulls. And then 70, an inside bull bar. You could argue it's, consecutive wedge tops, 51, 56, and 60. And the second wedge is 63, 67, 69. 70 is trying to break out above. But this needs to go relatively quick after 70. And you get a good bar 71. So the bulls need, they need follow through on 72 pretty much. And then you get a disappointing bar. A lot of traders exit below 72. Some limit order bulls are buying since 69, 70, 71 was relatively strong. There should be more buyers below overall, but not really all that great. You can probably buy above 73, but it doesn't trigger. And instead, traders buy below, and then you get 76. Basically the last ditch effort for the bulls. But I'm not trading on bar 76. For stop orders, I thought you could probably sell the close of 5 for a trade. You could probably sell below 8 or 7, but it's really not all that great. But it's probably reasonable. Same thing with 9. It's probably reasonable. I wouldn't take 12, but I'm sure some people would. 13 is probably a reasonable sell the close bar, and definitely 16, 17. I would not personally sell 25 or any of. I'm sure they're marked as reasonable entries, 25 and like 31, but I wouldn't personally take those. 33, you could sell the close at 33 or 34, but tough to do. That's so low in the range. 37 maybe, but it doesn't trigger, so not great. 38 if you can use a wide stop and scale in. 42, yes. 43, 44, sure, but probably need a wide stop. 46, yep, good by the close bar or by above for swing. 48, 49, 50, probably also by the close, but getting higher in the range. I wouldn't buy 51 I wouldn't buy 54 unless you have a wide stop. 50, 58 is fine. Probably 61 is okay. 62 is by the close, but not great. 66, okay. And again, 76 if, you're Braves, but there's no worse feeling than trading bar 76 and 77 and giving back your daily profits. I've just done that too many times in my life, so I just don't like doing that. So yeah, consecutive sell climaxes, reversal up. The daily chart, you know, still disappointing follow through for the bulls who bought above here. So you can look at the day and be like, wow, what an impressive rally at the end of the day. Yes, but again, if you bought above this on the daily chart, this is your follow through bar, so it's really not all that great. So we're probably going to go a little bit higher, and but not that much higher. There's selling pressure on these bars. So again, big trading range. It's a new month, so we might have to trade above the prior bars month, which is the all-time high. But I would not, be that eager about buying up here if I was a monthly chart trader. And then I guess I'll go to the weekly chart. It's essentially an inside bar. Traders want this to close, or bulls want it to close bullish and start the new bull trend. It's probably better if it's an inside bar and a high one. But again, I think after this, we're in a trading range and we're going to be sideways for some time. All right.